Let's technically analyze SAP, and we're on the monthly chart. And the first thing that we can see in regards to this particular chart is that this particular stock is in an upward trend, as you guys can see, or an upward trajectory. And another thing that we can see is that the market had given us a very nice W structure over here, and it's actually an overextended W structure, as that first leg of the W is much lower than the second leg. And we can also see that it has a neckline more or less at that level. And as I always say, guys, whenever we have these patterns such as this W structure, you want to see price breaking sufficiently above the neckline and then come back to the neckline to give it a test. And more often than not, where we have that neckline is where we look for those potential buy opportunities, especially, as I usually say, if the neckline aligns with any key numbers that we have in regards to the Fibonacci retracement tool. And that's exactly what happened, where at this level over here we saw price breaking to the upside, coming back to the neckline to give it a test. And at this point over here is where we should have looked for those potential buy opportunities. And that is because, guys, remember, this W structure actually started at that level more or less, right? Gave us this W, and ideally we want to see price move up to that level to close more or less in line with where it had started. However, we can also see that after testing the neckline over here of this W structure, price went up and came down again to just retest the neckline of the W. And this level over here is now a very strong level of support, and we may potentially see the market from this level move further up to that level to complete this very nice W structure that I spoke about, right? However, having said all this, the only issue that I have with this particular chart is that, remember, price had given us this W structure, and what normally happens in regards to W structures or double bottoms is that a lot of traders and investors buy on the second leg and they place their stop loss just below, right? The other issue that I have is that if you were to look at this candlestick over here, essentially what it is a bearish candlestick which has quite a small body and a relatively long lower wick. And what this means is that we have a lot of liquidity here, and as I always say, guys, liquidity is money, and that money sooner or later needs to be triggered by the market, right? So there is a lot of money stuck within this region in the form of those stop losses that I spoke about, as well as that liquidity that I spoke about associated with that candlestick, right? So it is quite possible that as much as price is at a very strong level of support and at the neckline of this W structure or double bottom, we may potentially see rather price from this level move further down to that level to trigger all of those stop losses that are located here, as well as the liquidity associated with that candlestick that I spoke about, right? And another thing that motivates for why we may potentially see the market move further down is that as much as at this level over here we have price retesting that very strong level of support, we also have a multi-session M structure over here, or double top if you want to call it that, and it also has a neckline more or less at that point. And just like with W structures, whenever we have these double tops or M structures, we want to see price breaking sufficiently below the neckline and then head up to the neckline to give it a test. And at that point is where we would look for those potential sell opportunities. So it is also quite possible that we may see the market from this level actually move further down to around this level to trigger all of those stop losses that I spoke about, as well as the liquidity associated with that candlestick, right? So what am I saying? So what I'm saying, in other words, is that at first glance it looks as if it's a good idea to sell or rather to buy at this point, but given the reasons that I've given you, it's actually not a good idea to buy at this point. And myself personally, I would rather wait for price to actually move further down, right, to trigger all of those stop losses that are located here, as well as the liquidity associated with that candlestick. And then at that point is where I would look for potential buy opportunities, and the market may actually give us this very nice potential double bottom or W structure, as you guys can see.